A warm welcome to everybody and welcome to this presentation where we have the pleasure to present NNIT. To help us through, we are joined from the company for CEO Per Foss and CFO Carsten Ringius. Welcome to this event. You were not here in the Q3. Today's event primarily covered the Q4 and the full year results. Looking at the headline, I think the momentum you saw in Q3 actually continued into Q4, but also the carve-out cost or the cost of a little bit delay in your sales process might still affect 23. So I think that was some of the headlines. You will tell us much more. As always, ask questions in the box down below. Do it during the presentation. We will take it after the presentation. You can ask in English and Danish, and I will try and translate to the best of my ability. But for now, Per, I will hand the word over to you.
Thank you, Michael, and happy to see the rest of you. Me and Carsten will walk through a presentation focusing on what happened in 22, but also, of course, looking into 23, including that we now have provided the guidance for 23, which we also will spend some time upon. But if we now start on looking on 22 as a whole year, including the fourth quarter, it has truly been a year of strong transformation. Yes, I know that's an overused word in today's business society, but I do say for NNIT, it has truly been a year of transformation, primarily marked by the big event we announced on June 22nd, meaning that we announced that we are going to focus NNIT going forward on our life sciences business and our digital consulting business, and as a consequence of that, decided to divest our infrastructure business. And at that time in June, we also announced that we have found a buyer to the business. Our intention was to conclude that transaction at the end of 22. But what happened then is that due to two things, firstly, some regulatory approval that was missing, but that there also were a few clients that had not yet given their consent, primarily in the public sector, because this deal is built upon that the client are giving their consent. Then, unfortunately, we just recently needed to announce that on the positive note, we have received all the consent from the clients, but unfortunately, the governmental approval to approve foreign investment in critical infrastructure in Denmark, called the FDI approval, has been postponed until April 17. Everybody is advising us this is just a formality. It's a new law that entered into effect in 21. So it is to be deemed just a formality. So that's one big event. And also in 22, we have been very active in moving all our global delivery capabilities from China to the Philippines. A big project for us encompassing almost 400 people that are exited from China, and we have recruited new people in the Philippines. That has been a very successful project, and it has come to total completion at the end of 22. Also in parallel, and maybe this is what I'm most proud of, is actually that in parallel to all this transformation ongoing, we've been very successful in the marketplace of winning new deals. Primarily, actually, here in the public sector, Denmark, but also around the globe within life science that I will come back to. But starting in Denmark, we have won a number of deals, combined infrastructure deal and application development and application management deal with entities like ATP, the Danish National Bank, Bane Denmark, also the Danish healthcare authorities, and also a governmental agency governing all the student loans, where we actually are to build an entire new application, and that's a contract that will run for 7 years ahead. So really successful on the business side. Also, we have been managing to do an M&A and a merger in 22 with a company called Prime for Services, that is active within probably the fastest growing within a pharma IT, which is actually production IT. There are tons of activities around the world where companies are ramping up their production activity, both to modernize them and make them more effective, but there also is a change in the pharma industry toward more to biomedicine and personalized drugs. That means that pharma companies need to upgrade their production facilities, where there are also others, like here in Denmark with Novo Nordisk and also around the globe, who are really doubling their production capacity because their segment of the pharma market is growing. So a very intense year where we will come back about the financial details of what we have done, because what we are now presenting is actually only the numbers of the continued business of NNIT, and Carsten will come back to that. But a few words about new NNIT. The new NNIT will consist of pretty much half of the people of today and pretty much half of the revenue, but it will be a more faster growing company with a higher profitability. From a solution standpoint, the new NNIT will be centered around two business areas, which is life sciences here in Denmark, in Europe, but also in US and in Asia. That's something where we have been investing heavily during the last 3 to 5 years, both organically, but also through a number of well-pointed acquisitions, where the last one was, as I mentioned, SL Control. It will be a far more international company, where, for instance, our life sciences business, only 20%-ish of the business will be here in Denmark. The rest will be globally. So we will be a much more global company, also helped by that the business, the part that we are divesting, is more or less entirely Danish. So that's why we're going to be a more global company, but we're going to be standing on two legs. Apart from the global life science, we also have a strong presence here in Denmark in the public sector, most notably, where through some of the wins I elaborated on in my beginning, but also through the business we had already before these wins, we have really been expanding that business, not the least during the last 12 months, and also winning contract that will provide business for us for many years to come. And then the third leg, which is within the Danish business, is that we are the leading provider in Denmark for Microsoft Dynamics solution for the larger entities, which is called Dynamics FO, Financial and Operation, which is for the larger businesses. There are other solutions from Microsoft addressing the small caps, and that's we are not active on. So it's going to be a well-balanced portfolio of services, where, of course, from a global perspective, the core would be our complete portfolio of services addressing the needs of digital services from the pharma companies, going from R&D through the clinical testing phases and preclinical testing phases to production IT and the commercialization. And all around that, of course, we work with regulatory affairs and also quality management. So I think we have a great portfolio to be a very specialized, highly focused project and consultancy company, well placed in the sector with high regulatory demands and a more stable macroeconomic situation or microeconomic situation in terms of demand, because life science sector and public sector are better places to be when you head out on stormy waters versus some other parts of the financial ecosystem. With that, I hand over to Carsten, who will elaborate on for you to understand the numbers, because we are humble. It's a little bit hard to digest maybe how we now are presenting our numbers. So, Carsten.
Thank you, Per. Starting out with life science, we saw a somewhat slow start of the year 2022, but lifted activity and utilization in second half of the year. We saw a positive growth in revenue driven by acquisitions, but also a positive effect from currency effects. With the improved utilization and high activity and capacity utilization in the second half of life science, we saw an improvement in the business, but you can say overall level at an operating profit level of 7 million, which is quite a decline compared to last year. But we had a good finish to the year with several orders, one in production and regulatory affairs, and we also see a positive development going into the beginning of this year. Moving on to cloud and digital solution, we saw a more stable 2022 revenue, and especially a very strong Q4 performance. We did some early capacity adjustments in Q2, also improving the utilization and profitability over 2022. And we saw a steady climb in profitability over the full year. We saw both strong progress made in China as well as in Denmark, especially with some major wins coming in that Per mentioned earlier. All in all, ending up at an operating profit of 64 million, and with a gross margin at 16%. Now, moving on to the overall segment information. As we mentioned initially, we have split our operation into the continued business and the discontinued business that we are selling off as part of the IO divestment. What you see here is the continuing business and the segmentation into, you can say, the already known segments, life science and CDS, in the old business unit segmentation. And then a third segment called that we call allocated to discontinued operations. What is included in this is both some additional business areas moving out from CDS, which is the cloud native and SAP basis business areas, but also what we call a stranded cost, which means that by selling off the infrastructure business, we have some additional cost stranded in the continuing business that we have to take out during 2023. This is, for example, some facility cost and some additional salary cost that we will take out once that we complete the closing, and once that we, you can say, initiate our new strategic focus on life science and CDS. So again, the life science and CDS segmentation here is what we earlier have been reporting on in the previous earnings release calls, and together with the allocated to the discontinued operations, that in total give us the operating profit of 7 million in 2022. Moving on to the overview of the group financials, we look into, if you look at narrowly on the continued business, we look into a revenue increase, revenue growth of 10%, driven by acquisitions and also positive currency effects. We look into increased gross profit starting from a low level in 2021. We also look into special items cost driven by some of these major projects that Per mentioned. A special items cost of 278 million, driven by the relocation of our delivery centers from China to Philippines, driven by impairment in our headquarter cost, driven by additional carve-out cost from the divestment that we have endured in 2022, but also the ruling by the Danish Business Authority, where we have to reclassify some earn-out payments to special items. All in all, this is adding up to a total special items of 278 million. This is, of course, not where we want to be. We have a growth ambition, and which is also why we are putting in place a guidance for 2023. This is not, you can say, reflecting our full ambition for NNIT once that we are on the other side of the closing and the additional carve-out of cost, but this will be a transition year. And I will hand it back to you, Per, so you can go into the details of the new guidance.
Yeah, I'm happy to elaborate a little bit on the guidance for 23. We postponed the guidance for some quarters, and I know there was a lot of waiting to get the new numbers coming out. So now we have been spending a lot of time actually around the new NNIT, the redefined or strategy that we will put in place which I elaborated on, but it also be following with a kind of a new execution model of the strategy. So the strategy as such is the same, but we will actually do some acceleration how we actually execute the strategy in terms of organizational structure, etc. But we'll also be looking at the numbers. Here we can see, looking into 23, that we will maintain or achieve a double-digit growth of the business with a 5% margin. But in looking at that, I think it's very important for everybody digesting those numbers, that also 23 will be partly another transformational year, even though it will be in the new setup. At some previous meeting after the third quarter, we communicated to the market that we will then, with the closing of this transaction in the early part of 23, we will get to a level of the speed in our body, so to speak, versus half year of 23. But then the full year will not be taking into account the full potential of the company profit-wise. But now, due to this delay, that will then happen more versus the fourth quarter or the end of the third quarter, which means that the potential of this company in terms of profit generation and margins, you will not see in 23. They will materialize fully in 24. But versus the fourth quarter this year, we should be able to demonstrate the level of profitability that is our goal on a more long-term basis, which is, of course, that we intend to have a double-digit margin also on our profitability. And then there will also be, and Carsten alluded to that, some special items also in 23, connected primarily to the carve-out project, where we kind of continue now to do the carve-out of the discontinued operation. So with that, Michael, I think we stop.
Yes.
For whatever question you might have.
The first question that comes from is, which business lines do you expect generate most growth from in 2023? You elaborated on some contract wins in the year end, but which business line has that primarily been in? It looks like the LFS, the life science, grew most, but I think that was acquisition. So a little bit, is it going to be more balanced?
We are going to present, as Carsten alluded to, the quarterly split of 22, right? We're going to do that in connection when we present the Q1 numbers. But we're looking at the growth number on these sectors. I would say they are fairly similar, this business unit, both in terms of growth and profitability. Because, I mean, historically, that's been a much higher growth compared with the Danish business in life science versus the public part. But thanks to the great wins we've done in 22 and how that builds the foundation for growth already in the book, so to speak, we foresee actually a really positive development also of the public business here in Denmark during 23, while we in parallel come back on track for the life sciences business, because I'm very clear too that the numbers for life science in 22 is not the level that we are expecting, and it's not also the level that we have been presenting during the last 3 to 4 years. So we expect that in the challenges that we've had at the beginning of 22 and also versus the fourth quarter, to a large degree will be cleaned out when we head into the 23.
Perfect. Then the next one. What are the outlook for your cost base and salaries? Can you send the higher cost to customers, and will most of your cost saving seen in later 23 or first in 24? So firstly, cost base, everybody's talking about inflationary pressure and whether you have the potential to send that on to your customers, and then the cost savings. When do we see that mostly in your reporting?
I can start a bit, and I think Carsten can put some more flavor to it. But if you look at the cost base of the new NNIT, it's going to be to a very large extent people, and then some buildings and other stuff. But I mean, we're going to be a people company where the wage inflation is the most important cost element to keep your eyes on, right? And we know that we are operating in a high inflation world right now. That goes for us and all other companies. But our target for salary savings are on a significantly lower level than the inflation is, because our people are overall fairly well paid. So they understand that they will not get the wage increase that is in parallel with inflation. And yes, there are some that doesn't like that, but the most majority of people are aiming for that. So we're aiming for, like in the country of Denmark, of a salary increase in the area of 3%. And there we have, we can get that to our customer. First, we have indexation of some of our contracts, not these public contracts. Even the hourly rates are usually indexed. And then I think that kind of increase you are able to pass on to your clients, because everybody sees the cost increasing. So I'm not overly concerned that the wage increases that we are looking on will be a challenge for us in 23. But I don't know, Carsten, if you would elaborate a little more.
Yeah, and in addition to that, you can say on the other cost savings, it would be something that we can actually address once that we are on the other side of the closing and we can reduce the complexity in our business. On the facility side, it's something that takes a little bit longer time to actually execute, but it's something that we are aiming at having in place during the end of Q2 and 3. So when we hit actually Q4, we should see a cost run rate that is more or less in line with what we expect going forward. So it will take us a couple of quarters to get that cost fully out that is stranded in the back office areas.
And the next question also goes around the cost, and I know that's one of the dysfunctions. You want to show improvement, but the stranded cost is kind of mudding the picture a little bit. But the question is here, because of the sale of your IO business, there's a little bit there's little visibility. Could you please elaborate on the cost development, how this will over the year, and how about 24? And I know I asked the same question also just a little bit before. Could you give us some kind, maybe here? I think the stranded cost must be some of what the 5% margin that you are giving us. Can you give us? I know you can't guide on it, but some kind of a feeling of the size of this stranded cost that you might take out during 23 and in the start of 24 when it's possible to do that.
But we're working on this in different levels. We are both looking at our utilization, but if we strictly look at the back office areas across salary, facility cost, it's in the area of 30 to 40 million that we will have to carve out. Yeah.
So that's around the area there, yeah. So that's one of the pictures, but it should not only be the only one we're seeing at. You say you will also working on lifting utilization when you have a much clearer picture of your project groups and such on. Is that also what you're saying, if I understand?
That is correct. As part of you can say our new strategy, once that we are on the other side of the closing, will be rolling out a new financial operating model where we have you can say an operating model that reflects that we are more a time and material, a project-based organization, and take out some of the complexity that the divested part of the business has driven into our financial operating model. So we will have a more clear performance management also in our new operating model going forward, once that we can roll out this new financial steering model.
And in 24, will we still see a little bit of the stranded cost, a little bit of you still improving? Is that also what I hear from you?
If I decide no, it will be out in this year, so we have a clear picture of the going forward cost levels.
So if I should put it down, and I'm not putting you on the spot, the Q4 quarter, will that be some kind of a more beginning to remind us about what is your at least starting point to start to improve on, and what we can look on forward?
That is the plan, yes.
Then there's a question. The last 5 years, special item has always been negative. It looked a bit suspicious. How will the special items develop over the next 2 years? Will you still have some? I think you elaborated on that you will have special items this year, but looking into 24, is there still some planned?
This will definitely be at a much lower level. You can say when we conclude the carve-out, we will have. You can say we are over with all the cost-related elements on the carve-out once that we are through 23. So what we see left in this bucket is the leftovers from the earn-out discussion as to these earn-out payments, what is left in 24 and 25, and that is at a lower level than what we have seen historically. So the level of special items will be significantly reduced going into 24.
Okay. And then there's a question, how much is the 5% margin still affected by cost from sold business? I think you kind of gave us a good answer on the stranded cost and on the utilization. Then we're coming to the sales price, of the divested business. You indicate that it will cover the credit facility. But is the question here, is that much lower than the original price you expected? Have you given us some kind of a floor? I don't know how much you can elaborate on the price compared to...
I can elaborate to it, and whether it's the detail you want, that must be your judgment, so to speak. But I mean, in announcing this deal in June 22nd, we said that the sales price was defined as 1.5 billion. There will be some reduction because the price was based on the performance of 22, and there were also some forward-looking indicators, some cost factor that also would affect the price. So what we communicated was that the price is kind of maximum 1.5, that there will be downward regulations, and that we as a seller could walk away if the price will go below 1 billion. So the guidance I can give you is that we now intend to close the deal when we have the regulatory approval. So implicitly in that is that the price will be in that range.
Yes, perfect.
So it means that we are not aiming for below 1 billion, because then there would be a kind of a no deal scenario.
Yeah, and just credit facilities, I did the fast math, that's around 1 billion. Is that correct, Mark?
It's in that neighborhood, correct?
Yeah. Looking more long term, do you expect AI may have affected your business negatively or positively? It's the hot buzzword right now. Everybody is discussing how will this hit their business, how will that support their business right now. So any thoughts on the way it could affect your business positively or negatively?
I missed the first part. What was affecting it?
The artificial intelligence.
Unfortunately, I mean, to be very honest, I mean, I think it definitely, if you look on the new NNIT, it is one of the business area where we are working. So when we are working in the production IT, in some of the regulatory affairs where we work with big data management, of course, you can implement learning system that could make that more intelligent. So it is part of our normal business portfolio, but we are not as such a company specialized in just artificial intelligence, but it's kind of a natural component of our toolbox. When we work, for instance, with the data migration, when we do the data cleansing, then you use toolings which make that more effective, and both from a quality and a price perspective. So yes and no, so to speak.
Yeah, so if I should understand you can partner up with integration of AI capabilities into your total delivery package to the customers, and that should maybe kind of be a positive, right? Because that should increase the ROE of the investment by the customers. But do we see any threats? I know it's still very early. Do we see any threats from somebody coming in from the outside with something more specialized AI to threaten you, or are your company so basic?
I mean, our core competences is understanding our client business and how we can use technology for them to be more effective. So understanding the client business in the range of services where we are, as I said, all the way from the early R&D phases up into the commercialization. We are implementing, to many degree, partner solution. We're working with a lot of companies around the world to implement different solutions to make this happen, like Viva for regulatory affairs, like a number of Passex, and we have Verum and Rockwell for production IT. So they are in their system building those systems a lot based on self-healing, self-learning system. So that's built into their solution that we are providing. And we can also, when we work with advisory services, help our client by implementing different solutions which contains AI. But if you are an agnostic AI company that doesn't know anything about pharma industry, we don't view that as a threat, because our core competence is actually understanding our client business, using the most apt technology to help them succeed, which includes AI. So that's a really unique selling point, is business understanding.
And then when I look at the cash flow, I know you don't guide on it, but I guess besides from that you have divested this business, I think one of the clues was also that it's much less cash sensitive. It's much less capex running. So should we expect maybe even more cash positive effect already this year than you might say that you had, that your earnings positive from going into this year? A little bit around the expectations for the cash flow.
But you're absolutely right. It's a less capex heavy business that we will run going forward. It's a much lighter balance sheet that we have to carry. So that should already have some effect this year, that as we discontinue the infrastructure business, we will have much less cash pull from that part of the business. So I don't know if that answers your question, but it will.
Yeah. I don't expect you to start guiding.
No, but I maybe could just add my flavor of having worked in other companies outside NNIT. I mean, we're going to be like any other consultancy company, where a cost base will consist of people, buildings, that will be very little kind of heavy investment in service development and stuff. So the cash flow looks that we pay out salaries each month and we invoice the clients, and there should be a delta between that, and that should generate a continuous cash flow. So if you look on the cash flow of similar consulting companies around the world, then you get a pretty good idea where we are heading.
Yeah, so a high cash conversion, perfect. And then lately, you won a lot of the public contracts, public sector. Is it? It can be two part. Are you starting to win bids more than, or is the public sector coming out of this COVID and actually starting to invest again? So a little bit of elaboration on. Are you starting actually to take market share? Maybe it's a hard word, but to take market share, or is it the public sector who has again come a little bit out of a lockdown and starting to run up projects again?
A good question, and I can actually give a couple of reflection on it. Firstly, I don't think the market as such has grown in last year. It is us gaining quite considerably market share. Then why are we doing that? And I think NNIT, who's been on the market for quite some years, has had some history in the present, early 10 years ago-ish, where we had some significant problems in the public sector. So there has been a time that has been a little bit less focus on the public sector. Me personally, having worked especially in the, not the least, the Nordic IT services market, where public sector has been a core focus, I have a very positive view on the public sector, basically around that it's a quite stable market, and it's also a little bit more higher barrier entry, whatever we call it, entry barriers, because it's a special sport. You need to know the public procurement process. You need to know how you manage and these public clients. So we did have the last 2 years actually a renewed focus on public sector. That's one reason. But the most important one is that we have a lot of skilled people in this company who has been working with public sector for many years. So when we now put some energy and some small investment in winning some of these bids. We had some really good people understanding what the client really wanted and put a really good solution in place. So we actually could beat great companies like Netcompany in Denmark, which we haven't done for quite some time. So we have definitely won market share in public sector in 22. I don't see an enormous increase in investment in IT. It's been on a fairly high level in Denmark. You know, there's a high ambition of being a digital society in Denmark. Now we have implemented a new digital minister in Denmark. So I definitely see that continuing, and hopefully us continuing to win market share.
Perfect. I think I will let that be the exit words from you. Thank you to everybody for participating, and thank you to you, Per and Carsten, for taking us to your company and answering questions. May everybody have a nice day.
Thank you very much for listening.